All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, January 25th. This is your end of day market call. Risk disclaimer in front of you. Everything that we're going through here is for information purposes only, not giving out any advice or recommendations. So, volatile day, but you could see the performance of the indices on the right. Back and forth action today. I'll go over that. And I think what's important is a couple of takeaways for the day. Noticing where the VIX is, which is still over 30. Noticing where there's relative strength right now in the market, and noticing where there's a bit of relative weakness again. And as always, we'll go through the charts. I mentioned in yesterday's video that I took some time going through the indices and talking about what I was looking for. Depending on the time of the day, you got some of those things, but of course, the closing print is most important. Some of those positives that were kind of showing up in the afternoon kind of got faded by the close. So a bit disappointing. So I'll go over the indices again, and also what I said in yesterday's video was that I was going to look at some single stock charts after the close yesterday, which I did. I was doing that late at night, and one of the things that I noticed is just a lot of technical damage in the growth names, and I just had a hard time kind of looking at them, scanning. I do a lot of scanning in FinViz, and I just said, wow, some of these names, they've really went down what I kind of consider as a technical breakdown. And when you have a technical breakdown in names, it doesn't matter what area of the market is, just looking at some of these charts, my opinion is that these names are probably going to come off the lows a little bit, but then you kind of have to wonder, the names that have been beaten down so much, I think it's just going to take a lot of time for some of these areas to recover a little bit. And I'll touch upon Microsoft first, because that just kind of came out with earnings. And there was an analyst on CNBC that I was watching after the close, and he was doing a good job explaining it. Right? Because I think sometimes when we see these numbers, if you're a little bit new to the market and not understanding how analysts work and so forth, and how the whole communication process is and the setup is, with Wall Street firms. And when I say Wall Street firms, I'm just basically talking in general about, they don't have to be on Wall Street, but they're institutions, right? They're institutions, they're pensions, and a name like Microsoft, or some of the names that we're going to see report soon, they're looking for big growth, right? So when you read the numbers that come across the screen and you're like, hey, look at their year over year growth, it's pretty good, right? They grew this much, right? And talking about their cloud revenue and so forth, wow, big move from last year, growth from last year. However, all of these analysts, they've obviously been in this game for a while, and their thinking is that they're looking to see if the company is going to continue to grow at a clip that may be faster than what they've done over the last year. And they all put out their particular numbers, send them to these institutions, and they're looking for high growth. All right, so that's really, and I just brought up the headlines here for Microsoft. This beat was not what the buy side wanted, right? So that was the analyst that was on CNBC. So that's what it comes down to, guys. I wish it would be simpler than this to say, hey, they beat on their quarter and it's year over year growth. The stock should go up on that, right? But if they're not happy with it, like, if the buy side is not happy with it, they're not going to add more to their position, right? They're not going to commit more to this company at this time. They may already have a position in it. They may say, hey, we're going to leave our position, as it is, right? There's another headline: Microsoft sees slower growth for cloud business. So as soon as you mention, and you're in a tech company, and Microsoft is not, I don't think, in my opinion, is a cheap company. I think the PE is around like a 32 or something like that. So as soon as you mention that the growth is slowing, you got a problem on your hands. And that's kind of what is going on within this group. The other thing too that just stood out to me was, like, I think it was over a month ago at this point, but the CEO sold half his shares, right? So it's indicating that maybe they're at like the peak of their growth at this point. Now, keep in mind, this is a really good company. It's not to say that this company is bad. It's a great company. It's just the fact of people are looking for companies to continue to grow and grow faster and faster. Once the acceleration of the growth begins to slow down, right, then people are not as excited about the company anymore. Again, it doesn't mean that the company's not executing and doing very well. Just the buy side wants to see, they want to see more higher and higher acceleration in a company. If not, and if they're a growth investor, they're going to go and they're going to move possibly their money to something that makes a little bit more sense for them. All right. So the reason why I explain this and go, because I start with the indices and so forth, because this is a big deal right now as we're going through earnings. And, and it's different than what we've seen, right, over the last couple quarters. We're seeing companies, the price action be different. We're seeing some of the numbers, be different. I was reading a report this morning, I think it was from Liz and Saunders, saying that the amount of companies beating and raising estimates are the lowest they've been for a while. So sometimes the expectations just get too high. What happens when the expectations get too high in the market? Right. Well, you begin to have pullbacks and things like that. Right. And that's kind of what we have. So this stock down to 273. Mind you, I kept hearing about, not by me, but, about from other individuals on Twitter about all the call buying and all the put buying in Microsoft. Keep in mind, they were implying a 7% move. That's a very big move for Microsoft. Microsoft doesn't usually move that much. Most likely the put buyers and the call buyers are not going to make money in this. Be careful when you're reading into option flow right around earnings. It seems like people forget sometimes, but option flow around earnings, very little of it actually works. It's a lot of hedging. It's a lot of people who have positions, and they may actually, put a few puts on to hedge their long position, and vice versa. If somebody's short, they may actually buy some pretty far out of the money calls to hedge maybe a short position, or they may actually be writing cover calls, meaning they've got a big stock position, but they're taking advantage of the heightened volatility around earnings, and they're going to sell some premium, right? Most of the calls that we saw, I believe, were covered calls, right? They're selling calls to hedge a long position, right? To earn premium. I shouldn't say hedge, that's not the right term, but to earn some premium on their long position, right? That's what I think a lot of the option flow is, by the way. So just get used to that as we're kind of making our way through earnings. So I'm just making a couple general points to this. All right, so let's get to the price action. I'll go a little bit quicker here with the price action, but let's start with just the 5-minute chart, because this is kind of what I was focused on today, just kind of the micro for the day. I figured today would be a bit choppier because we do have a Fed meeting tomorrow, and that's a very important event. There's a lot of people who are kind of sitting on their hands waiting for what Chair Powell is going to say, how hawkish he's going to be, maybe dialing down that that rhetoric from a couple of weeks ago about how many rate increases, right? So some of that is priced into the market. Right? I was talking about this on Benzinga earlier today. You could look at how many rate hikes what's called Fed fund futures are pricing in. So remember, right, there is something out there, and it's called Fed fund futures, which does price in how many rate hikes are expected, or on vice versa, when it's the other way around, it's rate cuts. But in this sense, it's rate hikes. So they're expecting, I see on mine for March, about a 99% chance that they're going to raise interest rates, right? So that is priced into the market. So the market shouldn't, so if he kind of comes on and says that, that there's a pretty good chance that they're going to go ahead and raise interest rates in March for the first time, and then he says we're going to do a wait and see type of approach, you might actually see the market rally based on that, because it's already, that first rate hike is priced in. Now, another hike, where, basically the second one for May is about a 53% chance, right? And you can see the implied rate, right? So that's why it's 0.47, which is about a half of another, or maybe a little bit more than that, actually. I guess basically where Fed Fund Futures is now, you have to imply that. All right. So I just wanted to cover that. But what I was watching here, and this is where today was a bit dicey to try to trade, because we did get the breakout of value, which we were kind of locked inside value for the whole day. Right. And again, this is important because this value area is important to me, because it's looking at volume at price. It is significant based on volume and price and time. Right. So, and you could see the beginning of the day, we kind of stalled to go higher. We went lower, could not get out of value, until about 120, made a nice move, and then gave it all back and then some. After hours here. So difficult, right? And, the other thing is no follow through from yesterday, which is disappointing. Also not able to kind of retake that 200-day moving average. So for now, and the week is not over, but, a really nice move from yesterday's low, obviously, and a hammer bar, but we're not seeing follow through. Right, we're down 2.2% today, right? So that's not follow through, and it's a bit troubling to me, right? And that's the feeling that I got too when I went through individual names last night and just saw some names, and we'll go over a couple of those areas of the market that look fairly decent and pretty good, but there's a lot of names that look like a mess on a chart, and it may, like I said, as I said in the beginning of the video, it may take some time for this to kind of go on. I mean, look at the move today in NASDAQ, down 4% today, right? And almost back to yesterday's lows, right? It's closer to yesterday's lows than it is into here. So, again, I'm being, I usually am more optimistic than this, but this does not look good. So we'll see what Powell says tomorrow, but to retrace, to give back 3/4 of that move from yesterday is clearly not what we wanted to see, in terms of for being bullish. I mean, look at where the low is, right? We're almost back to there. So another thing that I mentioned on Benzinga earlier is, pay attention to these 5-period moving averages. Go back to, we'll use the S&P, right? That's the 5-period moving average is very good to tell you if buyers are coming back into this market, are really taking control again of this market. Right now, they're not. The sellers are in control. I will give you a quick example of this, right? And I've used this multiple times, right? So here was the move in the beginning of 2020, right, where we broke down back on 220 was the first day that we started breaking down. Look at the price action and what it did. It stayed below the moving average. Okay, here was definitely tricky, right? Price retook this, right? But the 5-period moving average never really started to slope higher. After this little move, this bounce, notice what happened, right? And there were some green days in there, right? But if you go through and you look through this, right, price was never able to retake the 5-period moving average. This is really simple stuff, right? But it's also, it's hard for some to follow because everybody at this point was trying to buy the dip, right? And saying they thought that they knew, oh, we're going to reverse. This is a great buying opportunity. So, if you did buy up here, in here, it just took a while for you to be able to kind of come back, and in terms of your P&L. If you were buying stock, if you were buying options, maybe not, because options have depending on the maturity. But we really didn't make the bottom until the price got above the 5-period moving average. Also, notice what happened pretty quickly. The slope of the 5-period moving average started to move higher, right? So again, there was one fake out which was on 3.5, but we went down for almost for another good couple of weeks. So look at what we have in here, right? We don't have any confirmation, right? That the buyers are, that the buyers are coming back in here. Right. So that's what I will be watching, as well as a number of other shorter term things. I talked about the 1 hour chart too, that price needed to kind of reclaim. We tried to, another attempt, but I would call this a failure for now. All right. So that's what I see in the averages, that we're not able to retake that short term 5-period moving average, which means we're still deep in a downtrend. All right, let me talk about a couple areas that I thought were constructive for the day. The energy names, right? And this kind of stood out to me a little bit. At the end of the day, I was talking about all these areas that, made some big gains, like retail was one of those groups yesterday, but there was also energy was mixed in with that. So OIH is an interesting ETF. It's a little bit different than XLE and XOP because about 33% of the ETF is Schlumberger and Halliburton. If you take a look at these two charts of Schlumberger and Halliburton, which both reported pretty good quarters, here's Schlumberger and here's Halliburton. Very, very strong. This did take out a VPOC up here. But do you see the difference? Like, see how healthy these charts look? Right, moving up, they're above all the moving averages. They're trending. They're trending higher. CF was a name that I played today. Right, I've been watching this name for a while. CF Industries. It's an agriculture name. We've seen some of the ag names act pretty well. And if you look at the ag ETF itself, right, which is not stocks, it's a basket of commodities, right? You could see that this is also trending higher. So there are some bright spots in the market, but for the overall market, S&P, NASDAQ, these things are this is tough sledding right now in these areas of the market. And the way that I'm dealing with this market right now, until we kind of get back above. Until we get back above those moving averages, specifically first the five-day moving average, you're going to see me do a lot of this stuff: scalping, day trading, right? Until we've got our trend back. And there may be some things like I held on to some CF today. I took a target at 71. That was a 1 hour VPOC that was taken out. Right in here. So I took a target here. And then I'll look for this other one to be taken out at 73. But you'll find I'm just not going to be sitting with a lot of risk on the long side until the price action in the indices gets better, right? So that's the name of the game, is to say, hey, right now this is a scalper's market with the VIX over 30 and a day trader's market with the VIX over 30. I have to see a couple things happen. I've got to see price retake those moving averages and to see the buyers step back in. I've also got to see the VIX get closer back to a 20, not to a 30. A 30 just means the market is moving so much faster. You also see me trade things like SQQQ, right? And SPLX, which are leveraged ETFs, rather than trading options. Options are too difficult in this market. Right, if you're trying to, trade back and forth options, because if by chance you're in an option and it doesn't go your way, and the VIX starts to move down, you're going to be hit with what's called volatility crush, and you'll lose pretty hard on those options. So keeping option trading to a minimum right now. I'll day trade some of these leveraged ETFs. I won't hold the leveraged ETFs overnight. Unless I'm looking for some overnight move, because they're day trade vehicles. I get this question all the time. Sometimes people ask me about charts in the leveraged ETFs. Every leveraged ETF, I think at this point, if you go to the company's website, they have what's called a prospectus. They all have this in their prospectuses that these products are meant to day trade. They're not to hold more than 1 day. Why? Because there's major slippage, but they have to do daily rebalancing to get the leverage that they need, right? And there's a whole mechanical process that goes into that. But what it means is that there's a lot of slippage in these ETFs. You won't notice it if the markets trend, right? People have told me before, well, I've made so much money in leveraged ETFs. Well, if the market just goes in one direction, right, it will work. But if you have a choppy market back and forth where the S&P goes up 2% one day, down 1.5% another day, up 30 basis points one day, down 60 basis points the other day, that position will decay away, right? If the market does that, goes back and forth, back and forth, back and forth. If it trends, people have made really good money, and regardless of the slippage in the products, but you need a trending market. That's kind of like an option too, right? The more that you're in an option position and you get something that really trends, you're going to make a lot of money in that, and you won't see. And same thing with an option, right? If you're in a very choppy market and you're like long a call position, what will happen to the premium? It'll just decay away. Same thing happens in a leveraged ETF. You'll lose money, but not as much as you will in the option, because it has expiration. All right, guys, that's it. You know, a lot of scalping here. Even I didn't hold the OIH. You know, I hit kind of where I wanted it to get to for the day, and just figured that that was enough. I left a little bit of money on the table in that trade, but that's where the strength right now is in the commodity names. Look at Alcoa again. This was brought to my attention earlier in the day, but Alcoa was up 5.5% today. Right? That's really big outperformance considering what the indices did today. All right, guys, have a great night, and I'll see you tomorrow.